So it sounds like you all agree that there is a shift, and the finance sector is doing a lot in order to sort of push us in the right direction. However, there are some nuances in this picture, as we can see. And there is actually one question that is in line with something that I was trying to formulate. Can you explain the dissonance between the IPCC messages and these promises that are coming? Because we are all the time looking ahead, talking about 2030, 2050, but that window is narrowing down now quickly. It's just eight years away from 2030. So once again, is this happening fast enough? Oh, we actually have Jean-Paul here, but we should have Martin. It's great, yeah, 'cause this is interesting to him as well. Yeah. So I don't know who would like to. I would actually like to start with Martin in this, because there's, there you go. Martin, what do you think about the dissonance between the IPCC messages and the promises that are being made and the investments that are being done? I know he can hear us, yeah.
Yes, so really important question. I think it just reflects the fact that there is, we're not on track to meeting our climate objective. And so when that's not happening, it means that we have a gap between the promises that have been made and the actual needs of emission reductions needed to meet the climate objective. And that, of course, is reflected also in portfolios of institutional investors. Investors own a piece of the entire economy. And when the economy isn't on track to net zero, it means that the portfolios of institutional investors in aggregate are also not on track. So, and I think we need to, it's important that that we understand that this is not a problem that investors and companies can solve in a vacuum. We need stronger policy action. And the policy action must be tightened, and that will lead us, I think, in a better position to meet the climate objectives. And I'm sorry, I'm getting lots of feedback, that's why I'm...
We'll see if we can manage to solve that for you, avoiding feedback.
No, just to say that the investors and companies cannot solve these problems on their own. It has to be a stronger policy action that will make a policy more aligned with the climate objectives that we have.
But following up on that, and I'm going to ask you first, Martin, that's a question from the audience as well. What is more efficient in terms of reducing emissions? Investing in companies that are already green companies or companies who still need to transition?
So it's, I think, completely unrealistic that we can meet the climate objectives by building down all the existing polluting companies and building up new ones from scratch. So existing companies need to transform. We don't have time to build up new companies from scratch to meet the needs that we have for the future. So there has to be a transition. And we described a little bit the role of investors in that process. And I think the role of ownership strategies, the engagement that investors have with company is a really important part of transforming companies and having that pressure on capital discipline for those companies.
And that is leading us over to you, Carine, as an active owner and investor. When you are doing your investments, and you told us that climate is a topic that you've been raising several times, how many times? Was it nearly 800 times last year? That is quite a lot. How do you decide whether you would like to remain an owner and help to influence this green shift, or just, leave the company as a whole?
That's a very key question, and a question that many investors like us are facing. And where we are coming from it is that we want to be an owner That's where we get our long-term value creation, but also that's how we can influence the companies. Because what's clear, if we just sell, let's say, a brown company, that's not solving any climate crisis if we just invested in the green companies. And again, I very much agree with Martin. The transition needs to happen in the companies. We can't just say we're building up new green companies. And then you have to ask, what's then the role of the investor? Yeah, the investor's role is to be active owner and influence these companies and support the companies in their transition. And then, as I also mentioned, there maybe comes a point where you say, well, we believe really this company is not going to make it. This is not a company that's valid with a business model for a low carbon future. And then we can sell out. For instance, we have excluded all coal companies. And as I said, we also divested from many smaller companies that we believe will not be able to transition. But the core of our strategy is to remain an owner and be an owner, supportive owner, but also a challenging owner in the whole energy or in the climate transition.
Ulrica, as the CFO of a large Norwegian company, of course, then the oil fund would not be investing in you, but the money that you've been earning has been part of the wealth that the Norwegian oil fund has been able to invest in other companies with. Because you've been talking about the new strategy that you have. To what extent have the owners of Equinor been part of, I mean, how important has it been, the expectations of the investors and the owner? The Norwegian state is the biggest owner of Equinor, to make that transition happen for you?
Well, it's interesting because I think this transition is there's becoming, I believe, quite a lot of velocity behind this transition, which means that there aren't very different goals here. We all live in the world that needs this energy transition. So absolutely there is a lot of dialogue, there's a lot of investors' conversations across both our largest owner but also the smaller owners, and they are pretty much aligned. I really much like the latest presentation on nuances of green, because I think that's a little bit what we're grappling with here, is that what's different is not the direction, what's different is more the nuances and what's possible, and Equinor is trying to find the balance between being very ambitious but still deliver, and I think there is a complete alignment with that, which direction is going. It's more around the nuances, as I said. So we get a lot of feedback, we get a lot of input, and I'd say that the investors have played a large part in what we're doing, but not because they're pushing in another direction, it's because it's aligning where we want to go anyway.
But what happens if you do not meet your own ambitions for 2030, allocating 50% of your investments in renewable and low carbon solutions? Who will be held accountable?
Well, we should be held accountable, but I think this is an important point to, we're on track to do so, I should say. It's a very stretching ambition because, as I said before, it's one thing about putting the investment target out, it's two is to make that investment the right investment. I think it comes back to the answer here from Martin before, is that what could stop us is if we don't work together. We can't work in isolation. We want the same thing, all of us here. We want the government, we want investors, we want companies to work in the same direction. If that doesn't happen, that's probably the biggest risk, if we can't drive forward and make possible what we all want quick enough. Because I do believe that the velocity behind investment, etc., is there. It's how we make it work that I feel is the biggest risk, if you say.
Harald, where would you assess Equinor's activities on your scales?
I will not assess them directly here. No. In our, of course, kind of new investments in oil and gas, the IEA very clearly last year said that that's not needed in order to reach the most ambitious climate goals. But then again, it's kind of also what is the most likely outcome with the trajectory we are on now. It's not the 1.5 degree. That's not the most likely outcome. But of course, we should still continue to work towards that. But it's all about kind of reporting on transitions in all sectors and provide the transparency towards investors so that they can follow up. But then also, as Martin said, it's all about climate policies in addition. We need stronger policies from the policymakers to raise the carbon price and also with all kind of climate policies if we are going to succeed.
Stine, you were talking about the need for action in the race for zero. How easy or difficult is it for the companies that you are advising to make things happen with or without the help of investors?
I think, like Ulrica said, it's something happening everywhere, whether you are large as Equinor or one of the small, medium-sized companies. And what we see is that there's willingness out there everywhere, but how to actually start that path and how to move fast enough, that is a challenge. And I think it's a lot of different issues that will, judge us whether we have succeeded or not. Of course, it's the financial pressure that are coming from the large investors. But if we look all the way around and we look at the customers, because we don't talk about the customers now, and those businesses that need to succeed, they also need to have customers that want to buy their products. And it is a shift here, also on the energy sector. So that we also have to take into account. And from my point of view, I think it's technology, sharing of knowledge, technology, and it's also how private and public partnership can accelerate, and also systemic changes. We need to speed up, because we can find in small companies or in large companies, you find the really good solutions built on technology and partnership, but the systemic, the regulations and rules, they're not adapted to the future that we need and how we need to speed up.
That is another part of the equation that is not easy to solve here and now with the five of us. But I would like to bring in another particular feature of the Energy Transition Conference, which is the academic expert panel on the front row. As you can see, I'm not sure what you're actually seeing now as our digital audience, but everyone in the room can see this nice row of people sitting here. I think there are about 18. At the moment. And the first time I heard about this front row, I thought, okay, they're probably going to turn this conference into a thesis defense for the poor speakers on stage. But now I know better. They are here, they are truly engaged in the topics, they are bringing relevant and new dimensions to the discussion and challenging some established truths. And it's time now to let some of them at least shine. So what I want from you, dear academics and experts, is actually you've done, well, I'm not sure what you've done at the moment, but I want you to flip your name tag towards me whenever you want to pop a question or comment to the panel. And of course, you will get the chance to do that now. And I do know that there are a couple that are maybe more inclined than others to ask questions now. So if you do not want me to point at you, just hide your name tag. I think that's probably the easier. So I would expect Franziska Holz, who is professor of economics, she would probably like to ask a question. And yes, the microphones will be turned on. They are actually on. Okay. So you can just talk. So Franziska, yes, go ahead.
Okay, thank you, Astrid. Yeah, and it's on. Thank you very much to the panelists for really providing those very large perspectives. I would like to draw our attention back to the current situation. I'm based in Germany, where we are very much discussing our energy security at the moment, and we see that the situation with the Russian war in Ukraine is actually putting into question the Green Deal, at least in parts, in the European Union. And we see that what was our sort of motivating, or what probably was your motivating strategy to divest from brown assets, was that there is a fear of stranded assets, of assets losing value because of climate policy, that this whole concept of stranded assets is sort of put into question now. Suddenly, new LNG terminals in Germany are not an asset where we think it's worthless in 5 years, but it's something that we will push for and we will intensively purchase.
And you're discussing nuclear energy as well again, aren't you?
Exactly, and we are discussing extending our coal-fired power plant lifetime. So all of those brown assets are gaining a new value. So my question basically is, do you also factor that into your investment decisions, while at the same time having those 2050 or 2030 targets? Or do you here in the room at least actually say, well, no, climate policy is actually the primordial target? Where do you see that going in the next months? I actually say, I must say, I'm very worried by these new developments where we suddenly lose climate policy out of sight, and supply security is not answered with, yeah, let's do energy savings and let's switch to renewables even faster.
Anyone particular in the panel that you would like to address that to? Maybe Martin, Harald, Carine, or all of them? What do you think? Francesca.
I can start. Can you hear me now? It's better now with the less feedback. Okay.
Yes, good. It's perfect.
No, I think this is a really important question, and I think the challenge is that climate policy has never been seen as acute and as sort of, and it's always been sort of something that you do when you've done everything else in your inbox. And now, obviously, the situation in Europe is very, very serious with the war going on. So unfortunately, I do expect that climate policy will be put on the back burner. Obviously, this issue of energy security is linked to the energy transition, and there is an opportunity, should be an opportunity to scale up and ramp up investments in renewable energy. But I think also the policy-making institutions have been overwhelmed a little bit with this situation that is there now in the energy markets and, of course, in the geopolitical situation. And I think the bandwidth of policymakers to address climate policy, unfortunately, now is more limited. So that's maybe not a very optimistic assessment, but I think that at least in the short and medium term, I'm more pessimistic now about the climate targets than I was half a year ago, unfortunately.
Thank you. Anyone who would like to comment on that in the panel?
Well, I can make a quick comment because it's certainly influenced from an Equinor's point of view. So we talk about the trilemma between sustainability, security of supply, and affordability. And in times like this, inevitably it follows more the base need rather than what is sort of seen to be, could be from a need point of view, maybe like a second order, even if long term it's as much of a need as the other. So I guess I'm a little bit more positive than that, because I do believe that this is a real shift, and I do think this is more of a speed issue rather than anything else, in the sense that so yes, there is probably a bit of an impact in terms of how do we secure supply. It needs to clearly be we need to get the energy where it's needed to be when we haven't gone far enough in the transition. So maybe this is just time to pause and step back and understand what the transition actually will look like. It comes back to what's real, but it shouldn't stop the transition, and it shouldn't really stop. It's just a challenge. Now we know this challenge, how do we put it back on track again and continue to drive? But I do think the security of supply part of the trilemma has risen on the chart.
Thank you. You just raise your hand whenever you want to reply, but if there are no more comments, I can see there are several amongst the experts. So Stephen Gabriel, you are a professor of applied mathematics, I think it is, in mechanical engineering department at the University of Maryland.
Yes.
Go ahead.
Thank you. Also at NTNU as part of the energy transition.
Yes, you are.
Following up on Francisca's question and kind of related question. So there's a recent, I think it's a memorandum of understanding or something like that between the U.S., Biden, and he was in Poland recently about trying to supply the deficit in the gas from Russia, right?
To EU, yeah.
Yeah, exactly. And so Norway, I think, is at near capacity, so they were not able to do that, but the U.S. might help. And so one is kind of follow up about the geopolitical aspects of the U.S. LNG. How will that slow down the energy transition, or do we need to have like a two-phase, take care of this immediate problem, and then we worry about, the longer-term thing? And then following up on one of the questions someone had, I forget who it was, in the U.S. we have some very good carbon allowance markets. RGGI on the East Coast, 10 U.S. states with about 60 million people, so it's roughly the size of France, and then the European ETS too. Why can't we have a global carbon allowance market, which would be maybe part of this two-phase approach where, okay, you can burn low carbon fuels in the short term, but then you're going to pay for it, like very successful RGGI and other allowance markets. Thank you.
Thank you. So would you direct your questions to anyone particularly in the panel, or?
No, anybody that wants to answer, I guess.
Stine?
No, I think it's a really hard question to answer. I'm not a politician at all, but we're facing a terrible crisis in Ukraine, and of course it will affect everything we do. But at the same time, we have faced another terrible crisis with the pandemic, and we're still in it. And the pandemic haven't slowed down the transition for renewables. So is it possible to believe that we are able to have two thoughts in our heads at the same time? I believe so, but maybe I'm too naive, yeah.
Harald, are you seeing any signs of change there?
I think one obvious issue is kind of the discussion about nuclear, of course. That has always been a big discussion. Is it green or not in this market? So that could shift. But then also I think you're mentioning the emission trading scheme, and at least that's a good thing now in Europe that we have that in place, and it's robust. It has been for a long time. So we have capped the emissions from electricity. And then, of course, we can't do this without a carbon price. And of course, the more regions that could collaborate in establishing this price, the better. But there is kind of, there has been trying to kind of make this, to have this negotiation across regions, etc. But I think it has been quite difficult as well. But that's more part of the international climate negotiations. But of course, the ideal would be to have a very high carbon price globally with CO2 taxes and emission trading schemes. That's part of the policy mix.
Is it realistic that we're going to have a global carbon price?
Not only kind of parts in kind of different, not a kind of unified carbon price globally. I don't think that will be the case.
I still see several. Johan Hustad, you've been waiting for a long time.
Thank you.
Yeah.
Thanks a lot.
Go ahead.
Well, my question is about infrastructure for electricity, especially, but also for gas, because we heard from the first session that in Africa there is a great lack of investments in electricity grids, because that's vital to actually have renewable energies and to come forward. And also this will happen in Europe to larger extent, because we are talking about hydrogen, gas, infrastructure, for instance, and so on. And I saw from Carine your investments in infrastructure was, compared to many others, a little bit low. So my question to you is actually are there any plans to increase the investments in infrastructure for energy? Thanks.
Okay, that's an easy answer. Yes, there are plans. We have been allocated up to 2% of the fund in renewable infrastructure unlisted, and that's quite a new allocation we got from the Ministry of Finance because they decide our main asset classes. And last year, we were proud to announce that we have invested 50% in offshore wind farm, actually offshore the Netherlands, that supply electricity to 1 million households in the Netherlands. And what we have said is that we will increase our investments when it comes to renewable infrastructure, mainly in wind and solar. And we are constantly reviewing the market. We are looking for good partners, good projects. But we have clearly said that this is an asset class where we will increase our investments.
Good, thank you. And Harald, you were quite quick with...
I can just say that we have done quite many second opinions on grids and electricity, and it's also in the taxonomy. This is clearly defined as being green. We need to electrify the economies, so investing in the electricity grids are crucial.
I'm looking at the time, both here and on my screen in front of me, and I think we have time for one final question from the front row. So who to choose? Now, Asgeir, you've had your name tag on top for quite some time. Then again, you get to talk all the day. No. Go ahead. Be short and precise, please.
I think my question is about global capital flows and how can we make sure that the capital meets the needs. And I think in this morning's session we got an indication already with a corporate perspective saying that there are more capital available than profitable ideas. And then we got the African perspective with massive needs for investments in generation and infrastructure. So what are the main barriers to overcome?
You know what, that is actually a nice question to round up the whole thing. So what are the main barriers? And also, I'm going to add that to a question that came in from the audience. If the world heads for 2.5 degrees warming, which is, I mean, that could happen, how does that influence green finance? How to balance capital allocation for mitigation and adaptation solutions? Because we need to do both. So if you can sort of spin quickly, all five of you, some thoughts around that. That would be great. I think we can start with Martin, then Carine, Ulrica, Stine, and Harald. Martin, go ahead.
Yeah, thank you. I think this question about how to raise capital, particularly for emerging economies, is really central. So the challenge here is that a lot of countries, for very good reasons, don't really want foreign investments in their energy sectors, particularly in the grids and infrastructure. And so the problem for investors is, yes, you can find some projects, but there is in very many countries just one buyer, and that is the state-owned electricity company. And there's a monopoly in energy distribution in most developing countries. And so there is a large counterparty risk here, and also that for political reasons and to fight poverty, the prices to end consumers is held artificially low. And so that creates a large deficit, huge losses in these state-owned electricity companies. They have to sell the electricity at much lower cost than the production cost. And that creates a need for transfers from the government. And because the governments are strapped for cash, they often don't get that. And so the investors don't get paid for the energy they provide. And that creates a very bad investment climate. So this is challenging, but the Norwegian government has set up a new climate investment fund for developing countries. And we hope, of course, through that vehicle to be able to address some of these issues. But I think there are some fundamental structural issues around the nature of energy markets in developing countries that is actually very detrimental to foreign investment flows. So I think there are lots of those types of issues that need to be unpicked in order for us to actually make progress on energy finance in developing economies.
Thank you, Martin. Carine?
Yes, let me address the question around barriers to investments and to reaching 2050. I think it's important to think about what all the players here can do. And what's been said many times, and what is absolutely clear, is that politicians have a great role here. We talked about carbon pricing, where much more can be done if we can create better regional or even global solutions, like where we are coming the EU. But now we talk about finance, and of course, big investors like us also have a role. I talked about how we can push companies for transition. We can be supportive. But again, a lot needs to happen within the companies. We heard Ulrica talking about what's happening at Equinor. Other companies need to push their transition. And I think important here, which is another theme that's been raised, is data. The companies need to give us better data. And there are great companies out there who give us proper data, but there's still an enormous way to go for us as investors to get globalized, harmonized data that we can work with. And that will be part in reallocating capital. If you get proper data from the companies, investors like us can be better equipped to choosing the winners and the losers and allocate accordingly. So I think we all have a role to play, and it's important that we all sort of grab what we can do and push in the right direction.
Thank you very much. Ulrica?
I'll be very brief, and I will help you being that. I'll come back to that. I think the capital will go where there is a supply of the right projects. And I think that comes back to what I said before about government, industry, company working together to get the processes in place to availability of acreage and opportunity to invest. So I think there is a lot to be said, making viable long-term opportunities available to be invested in, but that requires cooperation and processes to be sped up in the short term.
Stine?
Yeah, to be very short, we need to lead by examples. So somebody has to show the examples, and if we go all the way back to what is actually sustainable development, it's about people and society, it's about climate and environment, and the economic perspective at the same time. So we need to lead with those examples to be able to challenge what you are facing, the big gap between the capital and actually how to build.
Thank you. And Harald?
We need stronger climate policies. But just to follow up on what Carine said is that we need the right data. We need data, but we need the right data. And in order to get the right data, we need to continue to work on a common language between the investors and the companies.
So I do sense certain hope, but there's a harsh reality in all of this. I would like to thank all 5 of you for giving us a lot of food for thought. Now there's time for food for the belly as well, quite soon. And thank you to the front row, and not to mention also the audience for posing a lot of interesting questions. So now we're moving forward, but before we do that, I would like you all to give yourselves and our nice panel a warm round of applause. Thank you.